You know what the hardest part of investing is? It's not finding good and undervalued stocks, because there are plenty of those out there. The hardest part of investing is to be able to handle the ups and downs, the crazy volatility of the markets. That's the hardest part, is to be patient, waiting sometimes for years for your investment to mature, instead of just giving up and moving to the next thing. And actually, for me, there's only one way to survive the markets, which is by understanding very well the assets, the companies that you hold in your portfolio, and developing a genuine conviction in them. Forget price charts, indicators, multiples. It goes way beyond that. And really, without understanding very well what you own, it becomes just impossible to deal with volatility, and you just end up shaken by it. And why am I talking about this? Why is this important? Because when it comes to investing in stocks, I see people making the most absurd decisions. Seriously, the stock market, in the end, for most, is a casino. It's amazing. People spend 2 minutes picking a stock for the silliest reasons and still expect to make incredible returns. I remember a few years ago, around 2021, when the stock market was super hot. I was talking to a friend of mine who's a doctor, super smart person, and he was telling me he was investing a good amount of money in Tesla. And his main reasons were because Tesla is a good company, whatever this means, and because electric cars are the future. Okay, that might be true, but that alone won't keep you holding your stocks for long, you know? Now, I don't know if he's still holding his shares, but if he is, he will only stick with them if his conviction in Tesla is really strong. And I doubt you can develop conviction without studying the company a lot and without understanding the size of the gap between the price that the market is assigning to that name and its real value. Can Tesla's stock double in the long run? Maybe. The question is, can you survive the volatility? Can you hang in there, waiting for years if needed? But take this stock for example, Ambipar, listed on the Brazilian Stock Exchange. This is a company that offers ESG services all around the world. So, for example, if there is an oil spill in the Caribbean caused by Shell, Shell can hire Ambipar to clean up the mess. But look at Ambipar's stock. In the last 2 months, it multiplied by more than 10 times. More than 10 times. And while I was looking at it, researching it, though I didn't buy it, I found out that at least 4 people I know were long here at some point. Some bought at these levels, others bought at these levels. But only one of them managed to resist this brutal downtrend. I mean, the stock dropped since its peak almost 90%. And she was only capable of such resilience because she knew the real value of this company, because she had been studying this company and talking to its management team for years, so she knew that the market was being completely irrational by valuing Ambipar at such price levels. But think about it, my other colleagues, the ones that bought this stock but ended up selling it, they selected the right name, they knew about the story and the upside, they even bought some shares. As I said, picking the right name is not the hardest part. Their problem was that as time went on and the stock dropped 40%, 50% and even 70%, their conviction on the thesis started to crackle, other investment ideas began to appear, and they just started to get impatient. And I completely understand this because when you're down 60% or more, it's very hard to stay long, and you really start to question yourself about everything. And I say this because I went through the same with my biggest position, Voxter, about which I talked in my last video. Now things have improved, thank God, but it was quite a test. Anyway, these 3 colleagues of mine just didn't make it with Ambipar, though they were right about it when they bought its shares. After all, this stock really ended up being a multi-bagger. The problem is that, as they probably didn't know exactly what they got on hands, they were just not able to hold on and to resist being so deep in red for so long. It's no surprise they ended up selling their positions, probably at a big loss, to buy something else. Now, if they knew what they were holding and had decided to just wait, it wouldn't even matter where they bought the stock. They would already be positive. Even if someone had bought this stock at the 2021 peak, he would still be up by now. Now, of course, talking about the past is easy, but really, that's why knowing what you hold is so important. Because if you don't, you won't have the necessary conviction to stay in the game. You will either sell your shares for too cheap, at a loss, or you will just get out too soon. That's why we really need to dive in the assets, the companies that we buy, because sometimes this can be the difference between losing money and achieving life-changing returns. Well, that's it for today. Just a short video. See you next time.